Good morning and welcome to the Breakfast Club. My name is Darren Hancock and we're here on September the 3rd, 2024 and looking for the market to give us a little action this morning. I hope you guys had a great day. And I'm with you for a couple hours this morning at least before I head out to do a hypnosis session with a client. So let's kind of get through this. I'm a little late getting started this morning, so let's have a look at what we got. So let's look at the daily chart here on NASDAQ. Remember, it's the day after a holiday, so ICT usually says watch the market like it's a Monday, because people are going to be rushing in the market. It could be doing some quite dramatic moves on a day like today. But as we did yesterday, we're still able to find some trade setups. So let's see if we can do the same thing this morning. Let's go with a daily chart. Let me just take all this stuff off of here first. So we reached into that area of imbalance here. Michael mentioned this several times in some of his videos. And we wanted to see if we can get through this, right? We managed to reach up into this wicks 50%. We've traded back down inside this imbalance. We returned to the inside of that balance, and now we're starting to roll over. I like the idea that we've now broken this, taken this high out here, and we've returned several times to the fair value gap. 3 times, 4 times we've returned this fair value gap, and we're starting to peel off. So as a normal play, we should see this continue to take out these lows and start reaching for lower lows. So I'm looking for this to take out Friday's low. As a continuation, if we continue to get up above these equal highs, 751 is the upper limit of what I'd like to see there. Whatever that candle's down candle below is, or 743. So write that down, 743. Write it in your book somewhere as the upper limit. If we trade through 743 on a close today, we're looking for these highs. We're looking for, I'll put a little box there so you get an idea where it is we're looking for. While you see it ready, just delete that. It's this box right here. We've come back up and tagged it multiple times. So now I want to see that provide support and start coming back lower. We have a fair value gap below us. This relative equal lows between these two lows. I like this. And my downside objective would be somewhere around 19.1. So if we continue pushing through for the rest of the week, look for at least 50% of this range on the daily. So I'm bearish right now. And if we take out these highs, if we go bullish for 10 o'clock, take these highs out. These ones have been staying in place for a while now. If they stay in place, we continue to push lower. That's my downside objective initially. And then I have other ones, but just settle for that for now. So if this was once again relative equal highs, we're keeping these all intact. There's a ton of liquidity sitting up here. We'd expect that they'd want to run up and take that out. Breaker, return to breaker, continue going lower. So far I'm looking for these relative equal lows here and pushing back down into this gap here below price. So as a low, we could still run back up into this level here. I wouldn't want to see any more than the consequent encroachment of this 50% of this wick. I wouldn't want to see any more than that get taken on the way back up. If we run back up again, that's all I want to see. And then I want to see this go lower. And let's look at natural gas. It got below this, come back up. See natural gas go lower, relative equal lows. We're back inside this range. We may see this roll over and come back down, take these lows out now. If we stay inside this range, if we get above this candle on a close, so today's high, if we get above today's high again, look for tomorrow to run back into this range. Mind you, we have taken that one out. We've come back inside it, so we may be running up. And the key level for me is 1370. If we lose 1370 on a close, come back into it, find some support. I like to see it push back up into these 1427s. Bitcoin's been doing some fun stuff here. Reversal, came right back inside it, went for the new low. This is one of those ones where you say you want to see it close above it. It did, then immediately closed below it. Above it, below it, inside it. Then it started to work the inside before it finally dropped, came back, tapped it one more time before taking these lows out again. We have a reversal. Traded above it, right back to it with precision, and then we're coming back inside the range. If you measure from here to here, you'll find that this is that fair value gap that sits in the middle. That was an initial idea that we're looking for a run to go higher. See? And we waffle around inside there for a while. I want to see it break out, find some support off of this, start pushing through into this higher level here. And it's really not the most premium PD array above them all. Find there's another one way up here. But these are the little stepping stones you want to see its support to go higher. Soybeans still heading for that objective we're calling. We've now traded above this level. You ideally want to see it trade back down here before it takes this high. But if it takes that high, then that candle's my in-play plate for a run above this liquidity above the market here. You want to see this fair value gap stay open. We can trade all the way back into here, but you want to see this stay open and then push higher. If we take this high. If we don't and it retraces back in, it can retrace all the way back down to this level right here. And then peel out of there. So for me right now, we want to see today close in sugar above these highs and use this fair value gap to go higher. If we're just coming up in here and we react off of that and we close below this level, and tomorrow we come back to it, look for it to take us lower. Coffee's given us that call that we were looking for. We want to see it come back into this fair value gap. It's dropped below it. Now we want to see, and it's rising back. Watch for coffee to run into this fair value gap right here. It could push right back up into that higher one, but I'd like to see that stay open, come back into here. This fair value gap inversion, busy, now turned inversion. You want to see it come back into here before going lower. Live cattle finally giving us our entry right here. Now you want to see this start really climbing out of here now. We get a body above here. Found some support at this. Yeah, I want to see upside prices now. We come back and revisit this fair value gap. No more than the consequent encroachment, and then start pushing higher. We're still working that gap. Lumber, I'm looking for it to return to the breaker at least once. So far, they've just come back to this old low right here on Friday's candle. Still looking for this lower level here. And we're still sitting on lean hogs. August 12th. Did they gap up somewhere? I haven't seen lean hogs trade at all since the 12th. So I don't know what they're up to. Maybe I'm not getting a... I am getting it delayed, but I don't think I'm delayed 2 weeks. Anyway, don't know what's going on with that one. Gold. Let's look at gold. So far, gold is coming down, finding support inside this wick. A lot of wicks going on here. Relative equal highs. This has all been made jagged. So you'd want to see it run up and take these highs. But right now, 50% of that wick is holding out, and we're holding 50% of this wick. So we're kind of stuck between these two. We'll wait for it to give us something more distinctive. There's no immediate reversal here on a 1 hour chart anyway. Oh, this is NASDAQ again. Oil. That's a 1 minute. Let's go with the daily. I wrote that a long time ago. So sell side liquidity is sitting here now. Let's get one too. That's my downside box for oil. And our little surgical group still working the high. Finally broke the high. Oh, they just came up and tapped the high. So you're looking for these highs to get taken. We'll see where that ends today. If that closes today, comes back and finds some support in here, starts pushing higher. We'd look for higher prices in this intuitive surgical. Morning. Let's see, we have 15 people this morning. Welcome all of you. Let's get down into the 1 minute here. Choppy. Morning, Hans. Mr. Pips, good morning. 9:45 this morning. DeMilo, good morning. How are you? I'm good. I'm very well. Thank you very much for asking. Where are you from, DeMilo? So let's have a look at a looky-loo here. Love is what I got. Love is what I got. See if we get reaction here. Start pushing higher. We're really between here now and right here. Let's see if we get down into this little box here. Guyana, but live in New York City. Cool. Well, welcome to Milo. It's a pleasure to have you here. Thank you for spending your time. I think ICT is on in about 3 minutes. If you're new to the game, I highly recommend you see that man. He's teaching it the way it should be. I'm just short of that, right at 79% retracement. We're back into this order block here. It'd be the one you'd be looking for if this was the reversal, and it was, we didn't really take out an old low. This was the reversal here. You traded back into it. You see how body went below it, then you went above it, then you finally settled in it and then left. So we'll see if we can get back into that box. If not, that there's a little swing right here. That little candle takes out that low. We get through this and find some support at this. Look for these lows below us. Look for this to go lower. Get those likes up. It's kind of hard when there's only 18 people in here, but I appreciate it, Tim. Oh my. I've got one chart that's got so many different key levels on it that it's getting super crowded now. There we go. Finally tapped it right there. Now I want to see how it reacts out of here. I want to see it start really moving back up. Morning, curryfish. Now, how do we react? See how it's hit that level, key levels, and we see a bit of a reaction, right? I like it. We stop on it instead of just running right through it. We're stopped on it. Now we'll see if we just run through it. So now you get a bit of a reaction. The algorithm's coming back to some lower time frame stuff. And here's your opening. Now I'd like to see this. That wasn't what I was going to say. But we'll see if this one, when it closes here, if we use this as support. Now, big bold candle down, looking for this stuff here. We are looking for an overall downward objective, remember, for the day. We're looking to keep pushing lower. Love is what I got. So we said the downside objective I want to see it support off of here now. We said that our downside objective was, oh yeah, 19.1, right? I want to see Friday's low get taken out. So that's the downside. Let's see if we get that today. I'm in on this trade here, right here, and my objective is to try and hold it longer. So I'm going to practice holding price a little longer for my deeper objectives. We'll see how well that goes. Not that hard to smash the like button. You know what, Tim? For some reason, some people find it quite challenging to hit the like button. It's like it's a very personal thing for them. If I hit the like, it means I have to really like it. That's okay too. It's all cool. I don't make any income, any money off this. I don't make any ad revenue off of this. So I'm just here to try and help out, do the best I can. I'm not going to be hitting it perfect all the time, but I'm here to try and help out and read price action. And you guys get to be part of my daily recordings on where I think price is going to go. And if we can share a little knowledge along the way, then hey, great, let's do it. We're all trying to get the best out of ICT principles we can. It's not a competition. It's just we're all trying to make a living. We're all trying to find our little niche. We're all trying to find our groove, as it were. So morning, Shepard. Yeah, I'm looking for this low right here initially, 370. And then we're looking for this low. I'm looking for this gap to be revisited here, this new week opening gap. Let's see if we can get a run down there this week. I'm just moving my profit into paying for my trade. Gotta let it run now. I've been trying to tell myself I've got to let things run. Aim for an objective, because usually I'll go in and out multiple times on the way down here, and then eventually it hits my objective and I just go, why didn't you just leave it alone and just let it run? You would have made so much more money going if you just let it run. So anyway, there's our first objective at 370 down here. See, then what I'm looking for is that fair value gap there to trade through it and get back up on top of it if we're going to go back higher. And that's the thing I do not want to see happen. If that closes in, then there is no fair value gap there. Love is a little tiny one this morning. Always hit the like button. Thanks, buddy. Yeah, like Hans had mentioned this morning, we have a 9:45 news release. Look at that, opened right on it. Just tapped it. Now I want to see it come through it, find some support at it again, and start going lower. Oh, it's a dodgy one. Inside there's a little tiny imbalance, and there you see that? Right inside that. Just watching this now. Yeah, I want to see it just fall out of bed. Just keep going. Oh, now we're through it. Come on now. Come on, dive on down. Do 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 do. Through it. We're through it. Keeping in mind your downside objective is Friday's low. There it is. That's the hourly low. Just taking that out. So watch for your fair value gap to form. Watch for the reversal to form. So I'm going to try and manage my trade here with reversal. As soon as I see a reversal that is clean above a higher time frame low, I'll close out the trade. And that's my discipline to hold on this morning. and aim for the weekly objective, or sorry, the new week opening gap down here. Let's see if we can trade into it, into the consequent encroachment of that would be nice. Or just wait for the reversal to happen. So see how long we can hold on to this trade for. So we're at almost 100 handles already. So this one's not traded back through. We're literally just closed above it. So my stop loss is sitting right here. My question is, because we've just taken out the liquidity here on the hourly, that we've still got relative equal lows right here. And we still have this big gap to revisit here. We're inside this fair value gap on here. If we take out this candle's high and we don't use this as a support, see how we've traded back inside it right here? We just closed above it, so that candle's low. That candle's low is 371. This candle's close is 387. $386, $387. So that closed above, coming back in, tap, and we came all the way back up inside that little fair value gap there. You see that, abs? Isn't that sexy? But we're reacting off of it. I want to see it go through it, find some support at it, and start pushing higher. I don't want this to be the bull trap. So right now it looks like it's going to go bullish. But that wick, we did not push through hard. This is the level I want to see it clear, come back, find support at it, and push higher. So I'm very cautious about a bull trap here right now, when I've got downside objectives still to be reached. So if it blows through this, takes this high, it'll take my stop, and then we'll look to go higher, back into that range again. And if it closes below that level, and the fact that we just keep wicking down into that, and there's nothing else above us here, it's all been worked. So we'll see how this acts inside this fair value gap and off these candles here. So I technically should close out the trade, but I'm just kind of, because they got a downside, further downside objective, and I am in profits already, I'm just going to try and continue to, I'll just let my stop loss get taken here. So we are still bullish right here. If we take that out on the close, then we've got a change in direction here. We have a change in direction already. We have a reversal if we can get above that high. See a body close above that, not just these little wicks. And then we'll look to come back into this range, 50% of the range. Regular trading hours gap. Ooh, that's significant, hey? Is that all that? I'm gonna call, I don't think I have an open range gap, regular trading hours. Right back inside it again. So we've traded above. Now if we trade below, then that's just run the liquidity above this high here. And I don't see a reversal here. We're below it again now. So we'll wait for 10 o'clock now. The 950 macro begins now. We're down below that fair value gap again now. Wait till 10 o'clock here and see what we get. I'd like to see us get taking that right little fair value gap here in this one. So close above this, get above here, use this as support to go higher. We didn't use that as a breaker. Take this low. Still got that downside objective. I want you to kind of see this here where Michael talks about wicks doing the damage. Watch this. Let me make this a little bigger so you can see it. See that? Look at the support we found on all those. And we finally worked the other side of it. We trade up. We did not break that high. Wicks did the damage right back up into that opening and continue to go lower. So it's nesting inside here. We found support. Once we broke that high, you found support to go take these highs out. It took the highs. The reversal, all it gave you was this fair value gap here. You traded back up inside that opening. We finally traded below this thing here. Again, found support inside it, and then that's the damage. Now we want to see this continue on the downside now. Downside objective, reaching for, again, that weekly objective. I'm in short right here. can see this level stay open now. See that stay open, and that stay open. Inside the small range. We're back over that hourly, return to the hourly low. Now we're trading through this. We've traded through that one now, so we're inside this. Got to get through here and that candle to go higher. Otherwise, we're just inside this small range here. Oh, there's the 10 o'clock. I was so close to taking my stop loss. My stop loss was literally standing right there at that candle's open. I thought if I lose this and I lose this, then I'm coming back into that range. Now I'm going to move to break even, just let it sit. I'll wait for a silver bullet entry. I'm looking now, if we get above here, look at this candle here. We want to see that get above that. This one and this one. Close above this one. You want to start seeing it eat through here now. Look to get back into that range. We're just taking out these little 1 hour lows here. Oh, we did hit it. I did not see that. We hit right off that weekly objective. Sorry, weekly objective. That new week opening gap I was calling for, I was looking for there and the consequent encroachment. I was not looking, I should have had that marked on the chart there as the downside objective. That would hit it right on the money. So now we're looking for a reversal. So we've got one here and here. Now we want to see that pop through. I want to see break in market structure now to support the fact that we've got a reversal going on here. Because we could start pushing deeper into this here yet. So I want to see a confirmation that we're going to go back higher for now. So we're just looking to dip into here. All right now is we're into this premium discount range. And there's that. We're right back to this fair value gap here. If you pull your fib tool from here to here, that's a optimum trade entry reversal. Look here. It's an entry drill, 70% right into that fair value gap here. React off that, and would like to see that push lower now. Let's see that come back, find some support inside here. $10.03. If you're looking for a silver bullet, this is the potential silver bullet for a short. It's also a return to this fair value gap here. We traded close below it again, came back up, tapped it. I want to see this continue pushing lower now. Not mucking about in here. Get some legs, start pushing. Stop mucking about. Come on in. Give it a bit of a push. This wick, 50%. You want to see the 50% given way. Trade through that to go lower. You want to see it close below that 50%. There's 50 right here. Downside objective 266. 212, and then was I said 100, 19100. So it's just right on that 50% mark. We have traded through the bottom of it already, so before you're taking that low. So the next area of interest for me becomes right here. And that break of that high there. It's got to get above here on a close to go higher. And there's only one inside here, so silver bullet for a short would be in here. If we stay inside this, if we close above it, we're looking for another run lower. We'll stay inside price action here and see if we can stay on the horse here. So far we're still bearish until we get through this level here. So if you're looking for this run back up, we don't have anything other than the order block here. We've traded above it, come back inside it, look for that candle's open. Or 50% of this wick. And look for a run back up inside this range. Optimal trade entry is here for a reversal. And it's also a silver bullet entry if our downside objective is still the weekly, new week opening gap. We've traded above 50%, so you're back up into a premium level to go lower. We're trading through this candle now. If you lose 50% of that, we're looking to go lower. I'd like to see us come back up in here one more time first before going lower. Give you silver bullet folks a chance to see if that play works. Your stop loss will be just above that high. There's 50% of the wick. Looking for support in here now. Morning, Derek. I noticed your stream isn't showing me live on YouTube. Listy, do you know what it means? I'll send you a picture. It doesn't say I'm live. That's probably why not very many people are turning up. But this is the most I've had since I got back in this into this little race here. I haven't had 36 people since before the summer. Maybe they were mad at me because I took a couple of weeks off. That's okay. It's all good. It says live on mine. Like if I go to my YouTube channel, it says there's a live stream going on. $36 likes. You get 36 likes here, Tim. Looking for this downside objective here. Next is the consequent encroachment of the new week opening gap. This is one of those ones I've been in this one and out and get taken out. Got back in, got taken out, got back in like 3 or 4 times already. And this is one of those ones where when we got in, oh, this regular trading hours, let me go to that electronic trading hours here. Where was the first entry? I got in way up here. You see the difference between 467 and holding it? We're down to 3 or 287. That's 100 and some odd handle, almost 200 handles here. It's 180 handles. And I got out. I think I lost, whatever it is, where's my first one? 14. So I got taken out right above that high there. Then I got back in once we get below this low. Had stop loss sitting here. And then I was out at this low here. Got back in. I had a couple in, one here. And then I got back in right here. And then it came back and took me out. I got into a profit from here to here. I think it is the equilibrium. That's that whole patience thing. You held onto it there and just had to weather this stuff because that was the objective. That's the part I still struggle with, looking for my reversals. Yeah, we're inside that weekly new week opening gap right now. This is huge price imbalance going on in here for the weekly. You can see that on the hourly too. Oh, I don't know. How do you find out once you click on your page? That's where I found out you were live. It doesn't say anywhere else that I'm live. Yeah, I probably upset them because I'm not doing enough videos. I've only got 240 videos or so. The man wants to keep me working. So right now you're just looking for where's your nearest Fair value gap, SIBI. Of order block here. If we trade above this, break in structure. See how we're not breaking any structure to the upside? And we just continually, slowly grinding down. This was nice when it was nice and smooth. Then it starts getting a little chop, jumping back over itself. Optimum trade entry reversals. Optimum trade entry. Optimum trade entry. Like you see these multiple times from here to here. 70%. From here to here, just over 50%. It's the premium level. It's not optimum trade entry. That would have been up in that silver bullet we were looking for. And this one here, 50%. 62% is returning back to this last up close candle that takes out this low. You always showed up like the pic I sent you on Telegram, but now you don't. Oh, let me have a look at that. Oh, that's interesting. I'll have to ask them about that. Thanks, Derek. Thank you for pointing that out. Thank you. I will call YouTube and ask them a question on that. Now, if we can dig down into the consequent encroachment of this, you're kind of looking for your reversals. Every time you hit these key levels, you're looking for, is this a reversal? Is this time and price related that we should see a reversal? So there's 62%. That candle's low. Add those two together. There's nothing else inside here unless that's a little imbalance there. Let me have a look at that really tight. Yes, it is. Little tiny imbalance sitting right here. Which is also mean threshold of that up close candle. It's all covert live streaming now. You have to actually come to the channel. I don't even know where to even contact them for that. Does it still show you that I'm not live, Derek, now? Now that we've been on for a while? Well, there's almost like a 30-second delay as well. Still doesn't show the red halo hit thingy, hey? There's that imbalance. Now look for this level here. We cleaned this up here. We get on top of that. Through this, we may be reversing now that we've hit that new week opening gap. I want to see a significant break in market structure though. We're just inside this imbalance here. Back to that candle's high. You opened a new browser window and mine shows live with a red halo thingy. Down channel break. Maybe I push down. What do you want me to push down? The mean threshold of this candle here. And there was that little imbalance we talked about. You want to see that whole price now. And continue pushing lower. That's the optimal trade entry zone. Boys, oil ever pooped a bed. Since the 29th, it's dropped $6. That's huge. Oil is falling out of bed, my friends. But here's the interesting thing about oil. Look at this. What chart am I on there? 1 hour chart. Look at this on a 1 hour chart. You want to see a beautiful little reversal that you want to catch, studying these inversions. So we have a swing high. That low is taken out. So look for this down here. If you can't catch this one, wait for the next one. If the candle, one bold candle, continues to run through all the fair value gaps, wait for it to finish, and then look for the objective of the fair value gap right behind it, or if we have a breaker, run for a breaker. So we literally went pop, traded below that breaker, pop into it multiple times. You come all the way back inside the mean threshold of that candle, just short of it actually. There's the mean threshold. You're just shy of it here. Taking out highs, reverse, look at this right here. And then blam. And if you miss this one, you see this bull candle doing the same thing this one did. Change it, runs all the way through it. Look for a run back to the lowest down close candle. Trades back into it right here. And then blah blam. So you've had multiple opportunities to get in on this $6 run down. I wasn't watching it, but all right. Meanwhile, back at the ranch, there's another dive down. I'm short off of the optimum trade entry reversal. And I'm just going to move into profits to make sure that that doesn't come back against me now. I'm in right here. That return to there and then get short. And we're looking for the final objective for me to the day is going to be that low right here. And that will be 219. And I do like the 100 I mentioned earlier. That worked. Thanks, Campion. 155. Set up stop loss at last swing high. So look for this to return into here, or consequent encroachment of this SIBI. And that would be from there, those are. And you want to see the rest stay open. You want to see this upper piece stay open. Or just pull up short of it would be really nice. And then watch it continue going lower. Stage south. Stage left. Let's go. There's the consequent encroachment. We finished hitting that objective now. Last one is right here. We may be pushing for it, but I have that one, and then I have the ones below us here too. The next objective would be 205. After this one would be 205. And then the weekly fair value gaps below us. As Michael says, these are big draws on liquidity, right? See if the wick holds. Oh, we want to see it start booking it now. Let's go. Ah, it's heavy. It feels very heavy. Lovely, lovely. Staying open. You're constantly looking for the next fair value gap that forms on a SIBI. Every time a low is taken, especially when you're looking over on this side here, you see that low get taken, then you're looking for another reversal. Key levels, we're in the lower half, so take this, break this, and do this, and then do this. See how we're bouncing off the last 25% of that? We're into the discount array. We're into the premium of the discount. And this is the discount of the discount. So you're looking for that to still push further down and fill that up. Then 206. Morning, Russell. Oh, you missed a fun move down, my friend. Mind you, the mower needs fixing. You got to do all those things to keep life just moving along, keeping the economy flowing. We've been calling a stellar run down this morning from our return to old lows, in and out of price action, optimum trade entries, multiple optimum trade entry continuations. Our objective was fair value gap down here. We hit the first one, second one, we're just about to hit the third one now. And this little fair value gap fill down here at 205. And here we go. Give it a kiss. There you go, my friends. We have hit the bottom of the gap. Right, so now do we drive through it? And we look for another. I like this little pop down here. Might give you one more little swing down into there. Lovely. That's me done. That was my objective for the day. And I am done. If we reach for these lows down here now, that would be awesome to see. Now we fill that 205, 206. That's 200. Look for this downside one here now. And we've hit that perfectly. Now we're looking for this. I'd like to see that guy right there. Always keep your eye on the next fair value gap above you. It's a SIBI. When you've hit key levels, now if price just turns around and comes back up and starts wicking back up, we can catch that on the reversal. There's a small little imbalance right here as well, between there and there. And don't forget, initially you're looking for optimum trade entry reversal. These equal lows look, or these lows down here look good now for the hourly. Let me just put this across here so we get to see the whole chart. We have relative equal lows below us here. 50% of this wick is the fact that we're chewing through this fair value gap right here. Am I going to keep pushing lower? And you're looking for this low, the 50% of this wick. If we close through 50% of the wick, look for that low and then look for these lows down here. And we've got this new week opening gap below us, so that would be the next run on liquidity. That was the new day opening gap. We're through that. Now we're looking for the new, I called this the new week. It's a new day. The new week is down here. Get back to our minute. Oops, that's our hour. Close that off. Run back in here. Oof. Yeah, I agree. You guys must live in Houston. Only one guy on my street owns a mower, and his is electric. Yeah, you're right, Derek. We're in an extreme discount right now, and you'd be just chasing price if you jump on this now. Back up inside that fair value gap. Well, this has been a fun call today. I've enjoyed this. This is where Michael is looking, if I recall, around 100 something. Looking for this low. What's nice to know, we're on the same page. I guess someone could say, well, you probably heard Michael say that. And I have no argument. I can't say yes, I did, because I didn't. But look at 50% of the wick again, which is right there at 171. Let me just confirm that. $161, sorry. 161's the low. What a freaking run today. Wow. Just popped below that low. 75%. Now this would be weakness if we held here and turned around and came back up. But I don't see anything in here that gives us a chance to, on a 1 minute chart, to see a reversal. So weakness would be finally turning around right at this point here, looking for this to trade all the way through here and then start running for highs. Or we could use this as leverage. That's the first foothold to go higher. Second foothold to go higher. Breaking structure. When we get above here, then you know you're probably back in a big wick, pulling back on the day. And we're coming up for 11 o'clock. So this would be an optimum time to see a reversal. 50% of the range created between the open and 11 o'clock. or we can just continue down. We can continue down to the 50% mark, which is the 161. 161 is right here. Can't get in the wick is wick to 828 low. They're not my plan. Can you talk more about the entry timing and how to mark the correct range? Usually, and Derek, you can correct me on this one, there's a retracement around 11 o'clock. Always look for 11 o'clock. Look for time and price. So there's 50% of the wick. You want to see if that holds now. So you will look for time. We're expecting some matter of retracement back into the morning range. And then 11:30, there's a retracement. There's a look for the recent low to get taken one more time. And then you've got the lunch hour, which is that's the 11:30, starts at 11:30. And then 12 usually takes out just before, anywhere between the macro that starts at 11:50, takes out the recent low, and then you'll see a run back into the range again. So go on to Michael's, go onto the ICT index and look for the optimum time. So that's 10 o'clock. He mentions a whole bunch back here at 7 o'clock, reaching for the liquidity. So where's the 7 o'clock candle? Right here. So you want to reach for equal lows. They reach for equal lows and then come back up and take out equal highs. So especially if you got equal highs and equal lows below you, you wait for the first one to get taken out. So there's the 7 o'clock one. You're in the middle of that little range. You see equal lows below you and equal highs above you. And at 7 o'clock, you wait for one to get taken out first, and that's this one here. And then you can start gunning for the highs above you. So you wait for the reversal. So we don't have a reversal here. We do have a little tiny imbalance right here. We trade through it, wait for this one. You don't get either one of those, and then it finally ends up and takes you out. So he's got to look for the at 7 o'clock, look for the most recent highs and lows below you. If you've got equal highs and lows, you take them out. This is all in his videos, especially the one he's giving Caleb now, specific times. So see how we're getting some resistance here at that 50% of the wick. So this is the kind of thing you want to see, and then you want to see it pull back in here. We don't have that optimum. There's a little tiny one right here. Yeah, you want to see it break out of here, get way back into this range here. So if that was a high, yeah, see how 50% is right at our previous one, our previous fair value gap. We can get above here, find some support in here and push higher. But we got to wait for it to get out of here right now. Your stop loss? I can't tell you where to put your stop loss, my friend, but that's the level it fails for me to go lower. It fails up there, so it's quite a ways back in. If you've got your stop loss, if you're still running in this trade, look for 62 or 61. There's 61. Now you get right off of that 50%. So I want to see if it continues to push through now and start running for the liquidity down here at 100. 141. That's my 11 o'clock button. My alarm for 11. There's a small fair value gap forming here. You're gunning for 106. 106. Well, you're really heading down here. Well, you've got relative equal highs here now, and you've got this fair value gap. So for myself, if I was trailing a stop loss here, I'll be putting it right above these equal highs here. There's that little reverse. I'm looking for that. And now I want to see these highs get taken. And that there to get supported. You want to see a body break above here. And that little fair value gap there, right at 50%. There we go. So that trade would be off now. It's that 50% level. There's see at 161 right here. Now we've got a big displacement candle above these highs. I want to see this. These highs provide some support now. We may not even get in here now. Old highs. There's that candle that shows us we're changing direction. Taking out old highs. Watch where this ends, closes now. Come back, give that a little kiss right there. Now start pushing higher. If we drive all the way down, because we've closed above that now with a body, you want to see that just start climbing up higher now. If we can come back into here, I want to see this create a fair value gap in here, come back in, use the consequent encroachment, leave the rest open and go higher. Well, you may not be liking that triple Q. I'm going to call you triple Q. You may not like that. If this ends up booking it all the way down here and you say, damn, that guy doesn't know what he's talking about. But right now we're held up on that 50% and we're seeing a reverse. And now I want to see this keep pushing higher now. And it's at a time, 11 o'clock. We're at a time where we're watching for a run back into the middle of the range again, right? So for me, this is time, price, reversal, breaker, trade back to the breaker, push higher. So that's what I'm looking for in terms of, and I'm in on hit this as a long. And then we're going to use this as an example of using your fib tool to manage a small retracement inside this range. So as soon as it hits 50%, I'll move my stop loss to break even. Technically, you should take some above this high here. So just come back and tap that old high right there. Now get out of Dodge. You want to see that start going now. I'm at break even anyway. Just broke me even now. So now pay yourself there. Did not get the 50%, but I moved to break even anyway. Now I want to see it come back and tap right here. That candle's open. Come back into this range here, 50%. Unless she leaves on me. Right there, that old high, that'll give me this candle open still to go higher. If not, my stop loss was too tight too soon. Look for retracement, it says, and there we go. Got my stop loss too tight too soon. There's 50%. So now you would move to break even and watch. It literally came back and tapped those old highs there. So there's the 50% of this smaller range. It's not the one since 10 o'clock though. So we'll just see how this works in here. If we can get back to 62%. And we'll see us find some support here. Keep pushing higher. Well, if it doesn't return to the fair value gap, and remember I was telling you about the candle that bold, that if you see this one candle that rips through this and takes your objective right here, this becomes the objective, not this anymore. You want this to stay open. So when we trade above it, and we trade above this one as well, then this is the objective we're aiming for. We come back into that, tap it nicely, and keep driving higher. I just yanked my stop loss up too tight, too soon. Wait for the 50, then move to break even. Then if you hit 62, then you move to 50, so on and so forth. So we're just over for here, just over into the premium level. Now, if we gun this all the way back down, this is the level you want to see hold price. It shouldn't reach back into here. We should see this stay open. You want this to be a breakaway gap now and continue pushing higher and find support off this guy here. Anywhere inside here, as long as this stays open, anywhere inside here would be a nice entry. When it broke here, now you don't want to see this this candle's low get taken, because then we're starting to dig back into this range here. We've just swept above the premium and we're coming back down again. So that's where you run the risk of just coming back into the premium range to extend your price lower. So I want to see this stay open here. We've got no reversal here yet, except maybe, you know, a little tiny. You see it right there? We've taken out these little highs here, fill the fair value gap. We've come all the way back up into that right on the money. We want to see it get through this for a nice continuation. And we're above that premium, into the premium level of the range that we're just created right here. So now here's the fun part. When we see this coming up into here, get ready for 11:30 to take this low. I'd like to see this low get taken one more time and perhaps run this low out for lunch and then look for a reversal. So if you're on the wrong side of this, if you caught this and said, I'm going to go for a run, and you caught this to 50%, you broke even right here. So if that's your 50%, came back, gave you a bit of a squeeze, but now you hit 50% again. So you've got half your trade off, wait for 62. And then around 11:30, we're looking for that return back into that, to take out this low perhaps. Lunchtime would be nice to see this low get taken and then run back into the range. So we found support inside this fair value gap here. Bodies of the candles right at consequent encroachment. Nice. Just shy of 62%. So climbing the mountain, looking for footholds. That was our first one. Here's the second one. Here's the third one. Here's the fourth one. And you're looking for a slow, steady climb up on the mountain. That rock face there. And those are the holes in the walls you want to try and get your fingers into. I'll be right back. Just shy of 62% now. I'll be right back. Just gonna go to the bathroom. Okay, I'm back. All right, through 62%. Lovely. And if you're pulling your stop loss up and you hit the 62 and it came back and took you out at 50, there's your trade in this small little range. And it's worth what? How many? We picked 187 to 225. So almost 40 handles there. Sometimes price does not return, sometimes it does not. It does return, sometimes it doesn't. Not taken. The weekly low is not taken, so watch here now. And we've got these little highs taken. See how this fair value gap is not traded above. We've hit an optimum trade entry reversal. Watch right here now. So that one's done. And remember I was telling you about this low and potentially that low there now. You want to see this little box right here now. Trade to it. You want to keep coming back down now. Ideally, I want to see this get below here. Otherwise, this could be the bear trap. So I want to see this get below here. And now we're gunning for what? You heard me mention it before. Premium array, discount array inside this range. So we're looking for it to run all the way back down into here now. And then running to take those lows for the 12 o'clock to the 11:30. If we get back through here, find support of that, then you're pushing higher, and we want to get through this one on a close. Otherwise, discount array, you want to see it reach back into this fair value gap here and use this for a reversal. That metaphor was beautiful. You inspired me to climb a rock. Yes. It's not my metaphor, it's Michael's. But I do like it because living out here in the mountains, it really kind of brings it home for us. Back up inside this candle here. We want to see it break through the lows though. You don't want to get caught in a bear trap here. This breaker confirmation on the downside is what you want to see. Otherwise, this wicks 50%. You don't want to see that get taken. And obviously, our other objective up here. 11.12, you said? Yeah, this one right here. That's the one we've traded through. We're trading back inside. You want to see it hold price now. You don't want to see it trade above it and then start going higher, Derek. So that's where I want to see it hold price inside here. It's the one I've marked out here. Equal lows. Yeah, I'm looking for this to go lower. I want this to go lower. I want this low taken out before lunch and then the reverse. Find a reversal after lunch and perhaps take these lows out here and then the reversal. This is just a small retracement back inside a range. Because we haven't seen it close above here, we just see it retrace all the way back into the premium fair value gap, finds a resistance in there. Then we see this high get taken. We have a fair value gap here. We trade below it. Now we're trading back up inside it, and its consequent encroachment is providing support. That order block would be a breaker if we took this low out, so it's mitigation. So we're mitigating off of this, and now we've taken the lows. That's good. And I want to see this really start pushing down now and dig back down into this range here. Find some support off of this level here now. So if this was the short right here, when you recognize the algorithm saying, guess where I'm going? I'm going lower. I'm going to give you a little wick action, scare you off a little bit here, come back into this order block. Wicks do the damage. Price is still staying inside here. We've traded below it again. Back to the order block. Now you want to see this just, now you've run these lows out. I want to see this keep pushing through here now. You can use this one more time to find support to go lower. I wouldn't want to see that. Just want to see this start using this order block here to continue to drive down now, which I guess you could use the whole thing back to here. Oh, I see what you're saying. Okay. The high of the new day opening gap again. This wick here is the line in the sand for me is right here. So we've got this here and this here to keep going down. They're still finding resistance here. I want to just see this kind of peel off and roll back down now. It's too consolidated for me to put. Now we've got the bottom of the hour. 30:31. I want to see this. Then you want to see a crazy Ivan in here, and then the crazy Ivan go, I'm gonna chase you all the way back down. I see you. I see you. See, this is where I talk about where does it fail for you? And if you're in a trade short, where does it fail and reverse on you? Right now, we've got these lows taken. We have no reversal going on here right now. So I still bearish overall. We're still finding support off of this reversal here. We're still inside it, finding support off of it. And now you just want to see that just continue going lower. You've got this little pool of liquidity sitting up here now. So you can see how this is just, now you go, I'm 51%, 55% bearish overall here. I'm more bearish than bullish. So I become more bullish than bearish when I lose this high on a close. So that's where it fails for me right there. And then I'm looking for line in the sand, this 50% of this wick, and this fair value gap here to trade above. And then we look for, okay, so what have we done here? Inside this range here, it would be nice to see a 50%. And look at there's 50%. From that high to that low, inside that range, we've already retraced to a discount array, taking out these lows. Now you want to say, all right, if you want this to go higher, it's got to get above here to go higher. Right now it's still bearish because we're still in a supporting a bearish run. And this is my downside objective inside that run. So now I'd be like slammed up against break even just because I want to see it come back. We're back into this candle here now. I'll continue to come down here so I can have a mic drop moment. I've called it up. I've called it down. We called this back up again, and now we're calling this back down. And that's the level I'm looking for. So if you come back into this little level right here, there's your fair value gap. If you remember, we're talking about, we don't want to see it, leave it open and take off. Now you've got these lows forming. You see a fair value gaps forming. So you're looking for the potential reversal to continue going higher. But remember, we said I would like to see this low get taken out for lunch. Ooh, come on, give me a kiss here now. Give me a kiss. Prove my point. From premium to discount arrays. I did this yesterday, the day before. You keep seeing premium discount. You'll see me gunning for these over and over and over again. Michael, I swear to God, he's probably going to mention this some point. There's no way I've discovered something new here that he hasn't got in his repertoire, where you have a premium BISI and a discount SIBI inside a range where we're looking for a price to retrace into. And there's a little tiny imbalance right here. Now, if we lose this one on the downside, then we're gunning for this. 50% of that wick. Take that wick, split it into quarters. If we lose 50%, we're looking for the low, and then obviously the low over here. Come back up, find some support in here, and then roll over, come back down some more. Now that we've taken this, watch this guy right here now. If we close above this candle, then we're going back higher again. We've just retraced back into an optimum trade entry reversal to go higher. And we didn't quite get my discount array, but we did get into the optimum trade entry. So now we've just, see that? You know, you close right on it, open, tap it. Wicks do a little bit of damage. We're still inside this fair value gap here. Come back to the midpoint, mean threshold of that. There's a little fair value gap up below you here now. Wait for it to close. We'll see where it closes. Wicks can do the damage. This mean threshold of this candle right here. Watch where that closes now. Finally closed above it, right there. See that? Now you're looking to go higher. It literally said, I'm here, open, bang. And away she went. Right there. Gotta love it, man. I tell you, you gotta love this inversion stuff. And we were calling this right as it was happening. We're saying, watch this fair value gap here, watch for the close above, and there it is right there. And literally opened and left. Took these highs. Now we want to see if it gets through this candle. If this closes above here, this becomes the level of interest for me. And this is going to do the same thing we did down here. See how we did not get this opportunity right here? It did not trade back into it, but it traded into this. See, it's just running now. Now watch for this to come here. Find some support inside here, either here, consequent encroachment, or the low. But now there's the support you want to see. And look, we're getting up into that one. Look at it, right into the top of it again. Now we're bouncing between these two. It's exciting. The race is on. But we saw it right there. We saw it tip its hat real quick and left. You see why if you would have taken this run, and it's important that you have a method that if you're looking for that lunchtime to take out that low and you're in this trade short, 50% move to break even, 62% move to 50, and it came right up to there, then all of a sudden it shot down to 70, moved to 62%, didn't quite get to 75, came back, took you out. So your last take profit was at 70. The rest of your trade is in here, so you've got in from there, out there, in the situation where you're expecting it to go lower, but you were paying yourself on the way down. That's why that fib tool is a great thing inside a range to pay yourself. So watch here now. Do we find support off of that? And you want to see that go higher now. swing. We could come all the way back into this candle here. Don't quite touch it and go. We're gapping down now. Remember the midpoint of this wick? Right there. That's 50% of that wick. Hit it, reacted off of it. Come back to that candle we mentioned right there. Now you want to see it leave. I want to see the rest of this stay open here now as a breakaway gap and start pushing higher. I guess it can dig all the way into here. Revisit this one more time before going hot, but I'd like to see that stay open now and start really getting some juice. Still have not broken a body above here yet, and this wick's 50% is still holding price. We have this fair value gap and this fair value gap. I don't want to see this one give just to come back into here. I want to see that one stay open. And it's saying, nope, I'm not staying open there, and I'm coming back and I'm filling it in. Watch where this closes in here. Wicks do the damage. Ooh, close below it. So bigger dig your deep into this candle here. So watch this level right here now. %50 of the wick. Look at that. Beautiful. Ran it out. Did not stay open. Ran all the way through here. We're running back down into this level. Keep this eye on this guy here now. Still going to run those potential, run those for lunch. We've traded below it, back up inside it. You want to see us continue down now. The breaker at 1130 formed. Well, here's where 1130 starts to run out the most recent break. You know, you look back from 1130 now, and you want to see the most recent low taken out. Michael describes it in which video was it? 11. And you say why the fair value gap as support and not the breaker. This breaker right here. Yeah, if you lose this and 50% of the breaker, then we're going lower. If the breaker fails, which it did right here through 50% of it, and that fair value gap is the discount. Remember, we use this for support to go higher and take out these highs. We did not get above that high level or that 50% of the wick. So this is the reversal. So if you see it close below this, then you're going lower, and you're between this reversal going lower and this reversal going higher. And when you lose the bottom on the discount array on a close, then you're going lower. And look, we just hit that little spot. So see how a body closed below it, quickly traded back up inside it and balance that little fair value gap here, and then pushed lower. So now I want to see this fair value gap give way and start pushing even lower still. Take out these lows. Now you want to see this breaker provide support to go lower. I guess it would be these two because that's a down close candle. Is that a down close? Open 86, close 83. It's both of those. So you have to use that whole thing. We did not get back up into 50% of that wick. Close below this now. Get you some lunch right there. Yeah, I agree with you, Curry. That would have been a nice one to provide support. We did not want to see it. Remember, we kept saying we want to see this stay open, and then it's not staying open. It finally drilled through it, and you think, oh, that's not good. If we return to the breaker, and it started eating right through the breaker. And if you've ever heard Michael say, if you lose 3 arrays in one, it's going, your ass is next. This went through one, well, the open, the high, the open, and the mean threshold all on one candle. So your ass is next, which is sitting right here. You can reference that in one of his videos. If it goes through 3 PD arrays in one, so that's 3 arrays inside that breaker in one candle, it's gonna gun for the lows. So now we come back, find support at this, trade below it, come back inside it, back to 50% of this wick again, wick to wick. 50% is just below us here. Back into the breaker. There's an imbalance right here. Right back into the body. Low at 139 next. Yeah, I think that's, we're gonna go gun for this for lunch. And then that relative equal low. So far, we're finding support off here again. We ran through it, came back. The bodies are respecting it. So we're inside this range now. Could be back to 50% of this range first, which would be another return back into this fair value gap here. This one here. Okay, Curryfish, take care, buddy. Looks like a unicorn. No. You'll hear Michael talk about unicorns are very specific to each trader. They're very unique to each trader, how you see a unicorn trade. Yeah, I don't know if I see that right now. Not for me anyway. It's usually after second stage distribution, right? To find what I look at as a unicorn. You've got this first stage return back to the breaker. Unicorn on the hourly would be here. So let's look at this one here. This would be like a unicorn, how I picture a unicorn happening. So you've got old highs taken. You got the first stage distribution, reaccumulation, back into a breaker, run back down, come back up inside this breaker again. That's the second one right there. And then the unicorn, boom. It's usually a second stage distribution. And it's like perfect right off that guy right there. That's how I typically I would imagine a unicorn happening. What say you, Derek? Derek probably has a better understanding of that than I do. See how now we've traded below it, inside it, inside it. Now you want to see this really get some legs now and start pushing through to go lower. This is just trying to shake you off the horse. You're going higher, you're going lower. So now you have to stay. This is my fair value gap. All the time I'm on this side of it, I'm bearish. If it pops up above it, closes again, I'm bullish. And you got equal lows below you. So I use these fair value gaps as the changes of direction, gives me an idea of which side I'm on. And yes, you can get bounced around inside this thing. That's why when you're in consolidations and there's only one fair value gap and it's in the middle, then you're going to get bounced around. So wait for something clean to set up. That's the only one you can use to pivot off of. Otherwise, if there's a premium array above you inside a consolidation, then you bounce off of those two and you use the high one to go higher, the low one to go lower. And when you're in these little single ones, they can sure kick the crap out of you. Now we've just taken this low back into 50%. See that? Literally hit it, and you see there's a reaction. Now, do we continue to drive through it? Or we were going to retrace back in there once again. You don't understand unicorn at all. It's never interested me. The bodies are staying right on it. Give me a drive now. Let's go. No, we have not taken out that low yet. This is the low of the day right here. Here we go. Yeah, baby. That's the low. 142. That's the lunchtime. Look at that. Right on 56. Right at lunchtime. Take the low. And what are we doing for the daily? Now I want to see a fair value gap forming here, and I want to see some intention and get through this candle here. I'm with you guys for another 3 minutes, and then I'm splitting. Three for three. Now what? Well, my brother, I'd like to see this become a level of importance. I still like to see that all-time little, let's look at the hourly here again. I'd like to see this, these equal lows get taken as well. But what's in there? What's in there to trade to, you say? So either way, what you're looking for now, Craig, is just for this. Now that you've taken that significant low, it's lunchtime. We're expecting a retracement back after lunch. You're looking for an opportunity on the 1 minute to see if there's a reversal. And if it continues going lower, you wait. And then you say the mean threshold of this candle. If I lose the mean threshold of that, which is 140, okay, it was 141. So we've already hit the mean threshold of that. If we close below that, we're looking for the lows down here. And then you just wait. Now you're in a time and price where you see price, time, price for a reversal. So you just wait for your setup to happen now, or whatever setup, if that's your setup. You've got these equal lows below you, and now you've got relative equal lows here. And they can extend this a bit more, pop through here with a nice wick, and then look for your reversal. Just wait on the 1 minute now for your for a setup to occur, and wait for a structure to break. We've got a nice beautiful candle here. We've got a nice little fair value gap that's formed right in there now. So I look at this little fella right here, and you go, ooh, looky. Remember we said 11 o'clock or 11:30 takes out the most recent low created between 10:30. There's 11:30 here. So you look back and it takes out the most recent one, which is this fella right here. It takes it. Now I'm looking for this to close above here, and that candle right there. Find some support, up you go. Let's get back up into our premium array again. And this guy is sitting right in here. There we go. We're closed above. Come back in here. If it closes above here, then don't worry about this. We want to see that stay open and start pushing higher. If it trades back in, the ideal entry is right there. Wiggle room, stop loss. You happy? Reversal. We're talking about this before it happened. It hit it. Now you're looking for a run up. Have a nice day, folks. I hope you've enjoyed our regularly scheduled program. It's been an awesome, fun adventure. And I've had fun calling both sides of this today. This has been hitting perfectly in some price action. So I hope you guys got to learn something. I'm out of here. I gave you your lunch hour. I gave you a whole bunch of shit today. So go back through the video and look at what we talked about. And from that very first entry way up here, way up there on that perfect entry, all the way down to here, I gave you this reversal, and then that reversal, and then this reversal, and now this one. So I hope you've enjoyed yourself, and I will see you guys tomorrow, bright-eyed, bushy-tailed. Have you guys a wonderful week or a wonderful day, and I'll see you tomorrow.